Assalamualaikum warahmatullahi wabarakatuh. My name is Zur Elya Najwa binti Zunaidi. I am from class 3B. Our group will present about insurance planning. I will explain to you what is life insurance. It is a contract between two policyholder and life insurance company, the insurer, whereby we agree to pay the insurer a sum of money premiums in return for insurance coverage. Life insurance is a financial vehicle that we can utilize to protect our dependents from financial loss. By purchasing a life insurance policy, we can transfer the risk of financial loss to life insurance firm. As we can see in the slide, there are many benefits of buying the policy. The benefits of buying the policy such as to pay off the family's outstanding loans, to replace lost income after the insured dies or disabled, to pay medical bills for critical illness, to provide costs of children's education, and to provide funds for retirement expenses. There are three types of insurance policy. First, term policies. Second, whole life policies. And third, endowment policies. So, I will explain to you more about these policies. First is term policies. It is the cheapest policy and able to families with limited budget. You pay the premium, get the coverage, but get no money back. There is two types of term policies. First is straight term, second is decreasing term. In a straight term policy, the sum assured is fixed throughout the term of the policy. While decreasing term policy is one where the sum assured decreases over time until zero at the maturity of the policy. Second is whole life policies. It provides lifelong insurance protection as long as you live. The insurer pays a lump sum of the death or PTD of the insured whenever that occurs. It acquires cash surrender value after the policy has been enforced for some time. The cash surrender value is what is left of the premiums paid after the insurer has deducted all the costs and profits of the company. Normally, cash surrender value will be given and after 3 years or more of policy. Lastly, endowment policies. It combines insurance protection with a saving plan for the policy buyer. It has a fixed maturity, 15, 20, 13 up to 65 years. It covers the insured against death, PTD, and critical illness. Endowment policies are commonly used as savings plans to meet future commitments such as retirement or children's education. So, normally it provides less protection per dollar of premium, but it is the most expensive of life insurance.
How much to insure? The most important of our insurance protection need is family maintenance fund. It will ensure the viability of the dependent family units. The size of fund will reflect the level of living we would like to see maintained. So we have to budget an amount at least enough to eliminate the need for major financial adjustment. There are two approaches available to determine maintenance fund. The first one is salary approach. Since family needs depend on future prices, it is quite difficult to do the estimation. Based on the assumption as family requires 75% of its previous after-tax income to maintain its standard of living. Second one is there is a surviving spouse with 2 children. The support will continue until the insured reaches the age of 65. The second approach is the needs approach. The first one is to determine objective of buying insurance, such as pay outstanding housing loan, settle the outstanding debt, provided money for children education, and provided money for spouse retirement. The second approach is to calculate monthly expenses for the dependent family unit, or estimate amount of fund needed. We can do this by estimate the monthly living expenses for the surviving family members on the basis of family.
Assalamualaikum, my name is Nur Alia Nabila and I will present about choosing an insurance policy. It is important to choose the right type of insurance policy so that the benefits of the policy match your needs as closely as possible. Needs vary from each individual and depends on factors such as age, marital status, number of children, and employment status or spouse. The basic purpose of buying insurance is to ensure that your dependents are financially secure. In contrast, young families with small children are going to need large amount of death protection. Unfortunately, these same families who are on tight budgets and cannot afford to pay high premium for life insurance, they need to get the greatest amount of insurance protection per dollar spent. That means purchasing term insurance. Mature families in the 40 to 50 age group has different life insurance need compared to young families. By this time, you probably have enough amount of savings, but still not enough to retire. So, investment-linked insurance policy can be considered. Such policies provide a source of investment return for old age, while in the meantime, offer a limited degree of insurance coverage. For those people in their 50s, as retirement date approach, the emphasis is more on preservation of wealth, so purchasing annuities that pay them a constant sum periodically is attractive and beneficial.
My name is Ahmad Hakim bin Ahmad Bazli. Today I will talk about tips on choice of insurance policy. First, we need to choose an insurance company that has a solid reputation, financially stable, and has a good payment history record. Second, when we purchasing for a policy, we have to compare premiums for policy that are similar in terms of coverage, sum assured, maturity, provisions, and other features. Next, we have to select a qualified insurance agent. And last, before we signing the contract, we need to read the contract and understand all the fine print.